Hello, everyone, and welcome. Today, we're diving into a landmark change that is set to fundamentally reshape India's entire financial landscape, the new Income Tax Act of 2025. Now, if you're a tax professional, a business owner, or even a finance student, what we're about to cover is going to redefine your work for years to come. So let's get right into it.
So let's just start with a big question, the one that really gets to the heart of this new law. Is the era of sitting across the table from an assessing officer officially a thing of the past? Well, the answer is a massive game changer, and it's all built on a huge legislative shift.
And look, the scale of this change, it's immense. We're talking about the law that has governed Indian income tax for over 60 years, the Act of 1961, being completely, totally repealed. A brand new chapter officially kicks off on April 1st, 2026. And let me be clear, this isn't just another amendment. It's a complete do-over, a total legislative replacement. First up, let's talk about the end of an era. We're looking at the law that's finally heading into retirement, the 1961 Act. I mean, just think about the history here for a second. This act was enacted way back in 1961 and came into force in 62. It's been the absolute backbone of our direct taxation system through decades of India's economic transformation. Sure, it's been amended countless times to try and keep up, but now its story is officially coming to an end. And just so we're crystal clear, there is zero ambiguity about this transition. Section 536 of the new Income Tax Act 2025 spells it out in black and white. The Income Tax Act 1961 is hereby repealed. That's it. A definitive, full-stop repeal, paving the way for a complete overhaul of the system. So, if the old law is out, what's taking its place? Well, that brings us to our next section, the Income Tax Act of 2025. The Act's own preamble gives us a really clear mission statement. Its purpose is to consolidate and amend the law. This signals a very deliberate move to simplify and modernize, to take decades of complex amendments in case law and bring them all under one, hopefully much more cohesive structure. And here is the date you absolutely need to circle on your calendar. Section 1 of the new act is crystal clear. This entire new system goes live on the 1st of April, 2026. That gives us a little bit of time to get ready, but you know what? Not a lot. Okay, now let's zoom in on one of the most transformative features, the one that directly answers that big question we started with. Let's put the spotlight on faceless assessment. So what in the world is faceless assessment? Well, the new act gives us a pretty precise definition right there in Section 273. It basically means that all proceedings are now going to be conducted electronically through what's called an e-proceeding facility. The entire interaction from the first notice to the final order, all of it, happens through your registered account on a designated government portal. This comparison just perfectly illustrates the core shift, doesn't it? We are literally moving away from a known, local assessing officer who has a specific jurisdiction to a dynamic, completely anonymous, team-based system. That physical interface is being systematically designed right out of the process, all in the name of increasing transparency and hopefully reducing discretion. And you've got to understand, this new system isn't just, one person sitting behind a screen. Section 273 actually sets up an entire ecosystem. You've got the National Faceless Assessment Center acting as the main coordinator, and then all these specialized teams, assessment units doing the core work, verification units for inquiries, technical units for specialized inputs, and even review units to ensure quality. It's a complete re-architecting of the tax administration's backend. So that's all the theory. But how does this actually work in practice? Let's take a minute and walk through the new assessment workflow. The whole process is digital from start to finish. A case gets automatically assigned to an assessment unit, which could be anywhere in the country, completely breaking those old jurisdictional boundaries. A notice is served to you electronically. You then file your response and submit every single document through the portal. The unit drafts an order, which might even be reviewed by another unit, and then the final order is delivered to you, you guessed it, electronically. This table really just drives home the key differences, right? All communication shifts from physical paper and in-person meetings to exclusively electronic records. Jurisdiction moves from that single, known local officer to a dynamic, randomized team. And if you need a hearing, well, any required hearings will now be done through video conference, not in person. So what does all this mean for you as a professional? What do you need to do? Let's move on to our compliance checklist to see how you can get ready for this brand new reality.
First and foremost, and this is non-negotiable, you have to master the designated portal. This is your new office for any and all assessment matters. Knowing its features, its functionalities, and how to file responses efficiently, it's no longer just a good idea. It is absolutely essential for your practice.
Next up, let's talk documentation. It has to be flawless, and it has to be digital first. We're talking high-quality scans, really well-organized files, and clear digital explanations. Your ability to present a strong case now depends entirely on the quality of your digital submissions.
And here's a huge word of caution. Probably the biggest practical pitfall you're going to face is simply missing an electronic notice. With no physical copies coming your way anymore, diligently monitoring the portal and your associated email is absolutely critical. Missing a deadline could lead to a best judgment assessment, and that's a situation nobody wants to be in.
Okay, so to wrap all this up, here are the 4 key takeaways. First, the 1961 Act is gone as of April 1st, 2026. Second, the 2025 Act is our new framework. Third, and this is the big one for your day-to-day practice, faceless assessment under Section 273 eliminates physical interaction. And that all leads to our final crucial point. Your entire compliance strategy must now be completely digital-centric.
And that really leaves us with a final thought to ponder. With assessments becoming faceless and all communication being purely digital, how is this going to transform the very role of a tax professional? How will it change the way you advise and manage your client relationships in this new ecosystem? That is the big question for the future.
Thank you so much for watching. If this explainer helped you get a better handle on these critical tax changes, please do us a favor and like, subscribe, and share it with your professional network. And just a quick note, this video is for educational purposes only and does not constitute professional advice. Tax laws are always subject to amendments, so please always consult your professional advisor before taking any action. This is an AI-generated educational video.